How's it going, everyone? My name is Samson, and I'm here with Connor and Firas today. Obviously, as you guys know, two beasts of a trader. These guys, they know their stuff when it comes to smart money, and especially trading psychology. So if you've been following one of us or all of us for quite some time, you'll notice that we have similar trading when it comes to Forex. And I personally, I only trade a few pairs. Typically, I'll stick to cable and fiber and maybe a US major. But I do not trade indices and I do not trade gold. I know Firas likes to trade gold. But today we're going to walk you through a little bit of smart money on how we approach our trades, how we're going to execute and manage specific trades, okay? And especially with psychology. This isn't going to be as much technical because it really is your mental when it comes to this game, okay? You can know everything in the world when it comes to technicalities, or you could have studied ICT for years, you could have studied Wyckoff for years, you can know all these different techniques, but none of that actually matters without your psychology, without the mental piece, especially the risk piece. Okay, so you're going to learn the reasoning and the analysis and decision-making process of me, Connor, and Firas. And this is all for free, so please take advantage of this. Connor, did you want to introduce yourself?
Yeah, so I'm Connor. I've been trading for about a year and a half now. But yeah, I agree with there with the psychological side. I always say that most people do have the skills to trade profitable consistently. It's the psychological side that lets them down all the time.
I was going to ask you, when did you actually become profitable?
It was probably back in April time. That's when I got consistent.
You flipped the switch, yeah?
Yeah. What helped me flip the switch was just treat it like a business. Like there's a reason why only 10% of traders make it. It's because most people just don't treat it like a business. If that makes sense.
Right.
So you just need to give yourself a set of rules to follow and just stick to them rules, and then most people will be fine with it.
You're from London, right?
No, I'm from North.
Cut out, mate. Well, we'll see if he can come back. Anyway, I'm from the US. Okay, so I'm a US trader. I know Firas and Connor aren't. I know they're some ways across the country. But as a US trader, I actually can't be waking up at 3:30 in the morning every single night like I used to with reactive trading. Okay. Once I figured out that there was a way to pinpoint a certain price area, a certain price level where some kind of reaction, some kind of bounce was going to happen, right? Those quote unquote sniper entries, right? The precision, that's where the precision comes from. Okay. It doesn't come from reactive trading. If you're sitting at your trading desk for hours on end and you're just entering, that brings me to another point. Typically, I'll only take 1, 2, or 3 trades a week. Okay. I do not trade every day. I show up every day. That doesn't mean I'm taking an entry. Okay. And yeah, you can talk about hindsight. A lot of people can talk about hindsight, but when it comes to actually executing and pushing that button, it's a whole new ball game. Okay, so you shouldn't really be taking more than 4. I would say 4 or 5 trades a week. 5 is plenty, too much in my book. Like this week, I only took 1 single trade. Okay, and that partially because I was under the weather, but still. It should show you, it should tell you how much you should be picky with your trades, okay? And we're going to show you where those sniper entries come from today, and how you actually pinpoint that price level. And if you don't believe that this market is 100% manipulated and controlled, then you're not going to make it, okay? Because it is. 100% manipulated and controlled. Okay, there's a price delivery algorithm. Firas, did you want to introduce yourself now?
Yeah. Thank you, bro, for the introduction. As you guys know, my name is Firas. I have now been trading for around 2 years. I think the 12th of December, it's exactly 2 years. So it's been a long journey, and I've learned a lot during this time. And you guys that follow me in my free Telegram group, you know, you know what we've been through. I think I've had it for about a year now. So I have a lot of stuff in that group, and I agree with everything these guys are saying, because if you guys came here today to learn about like trading, or learn about, or like you seeing this call as, after this call I'm going to be profitable, like you might wake up some stuff in your head that make you realize what you need to be profitable. But I can tell you that it's not the technical stuff. The technical stuff is, I would say, like 50% of the whole bag, if not less, because it all comes down to your head at the end. Because it doesn't matter what you know. If you study ICT every single day, and ICT says this himself, I have students from 2016 that don't make money, and that just goes to show that it's about knowing when to execute, and know it, or following your plan. You need to have a set of rules, and you need to follow them to the point. And that's where a lot of traders get messed up, and I do a lot. Sometimes I mess up very much, and that's just about learning and progressing and getting better every single day by learning yourself.
Thanks, Firas. Yeah, I totally agree. And I want to make a point that in this business, you are striving, as bad as it sounds, you are striving to be like an emotionless robot. Okay. And I mean, literally, it's kind of like inhumane, right? It's a natural thing to be connected to things through emotions. You're supposed to be cutting all of that off. Okay. Do I still struggle sometimes? Yes, I do. But there comes a point in time where you've been through so much, or you're losing so much. You've done it all. You've blown the accounts, right? We've all done that. That's all a part of the journey, until you slowly start to turn the page. Okay. When I turned the page, it's about a year and a half ago. What I did was completely unlearned everything. I had to just make it a clean slate when I finally shut off the live accounts, when I finally stopped losing, kept losing money. And I actually sat on a demo account for months on end. Okay. And not live trading, and just sitting back, practicing that rule, that system that Firas is speaking about. You do need a trading plan. Your system should be the same. Every entry I take is based off of the same set of rules. Okay. I don't take a trade at this time on this day on a Monday, and then I look for a completely different system on a Tuesday. It takes years to master one system. Once you master that system, once you master that trading plan, once you master your risk plan and you stick to it, and it becomes a habit, like second nature, like breathing. Okay, then you can move on and try and create a new system. But one is it's all you need. Systematic trading is everything. You're not just taking entries. Oh, I bought in here, I sold there on Tuesday, I bought in here on Wednesday at this time, because I saw this, because I saw the order block, whatever you're talking about. Okay. It needs to stay the same. And it does not matter whether you're an ICT trader, whether you're a charter member. It doesn't matter if you're trading Wyckoff. Hell, it doesn't even matter if you're trading support and resistance. You can be profitable with support and resistance. You can be profitable trading breakouts. Will you be as profitable as smart money traders? No. Okay, but you can be over that 50% mark. Okay, you can be profitable literally trading trend lines if your risk plan and if your trading plan stays the same and it's efficient. You won't make as much money, right? You won't pinpoint the market like we do, but it's possible. So stop looking for the next big thing, the next new thing that you're going to learn. that's going to put you over the edge, that's going to make you $1 million. Okay, because there is no next big thing. You're going to keep looking for that thing for years on end. Okay, until finally you find it. But the joke is you never actually find it. There is no next big thing. There is no, oh, now I got to go study Wyckoff. You know, when you're done ICT, now I got to study this and I got to learn this. You haven't made any progress. Why are you trying to figure out something new? Stick with your plan for a month, literally just 1 month, and see how much you change. See how much your trading changes. See how much your results change. You might not be profitable, but they're going to change a hell of a lot, and I can promise you that. Okay, and I also want to point out that in terms of analyzing, me and Connor keep things very simple, and Firas is actually an absolute beast when it comes to, you know, analyzing everything on a chart from top down, right? From month to 1 minute. You know, this guy can do it all. Okay, he has a very more technical way of trading, which is honestly better from my point of view. But me and Connor do keep it a little bit more simple. So if you're looking for content, Firas has a lot of tools in the book. I'm just going to put that out there. Connor, are you back?
Yeah, sorry, my mic keeps cutting out.
You're good, mate.
Can you hear me now? Yeah.
Yeah, I was going to ask you, what's one thing that you'd go back and change if you were going to restart trading? You know, what's one thing that you would tell yourself, however old you were, with everything you know now? And Firas, I want you to answer the same question after.
Don't wishful think. So, like, I mean, when I first started it, like, you're always thinking in your head, oh, I'm going to get this nice cars, these big houses, all this money in like a month time. Like, wishful thinking. And then it just doesn't happen, just drains you. Another thing as well is just don't put a time cap on it. Everyone's different. It'll take as long as it takes. And the two big things that I change.
Awesome. Firas, you?
Yeah, I would say there's a lot of things that I would change, but I think the biggest thing that I would change is the frequency of my trading. You know, when I started trading, by the way, if you guys don't know, I think a lot of you know in here, I started trading via IM Academy, you know, so that's a whole new story, but we don't need to get into that. But basically, when I started with that, like, it felt like I needed to trade every single day. It felt like I needed to progress, and I saw it as something that, like, as Connor was saying, he was saying treat it like a business, but that's like the opposite of what I was doing and what most people are doing. We see people making profits and money on Instagram and all of that stuff, and we're trying to reach that in a month or in a day or in a week, and that's the problem. And the thing is, you can't do that with trading. It's about following a system, as Connor was saying, and sticking to it, and like not trading every single day. You can't trade every single day. Like, it puts you in that state of mind where you actually are putting yourself in a position to lose, because trading is about probability, you know, and it's not about getting in every single day and putting in a trade. It's about actually looking and waiting for the perfect trade where you can actually put in your risk and actually get something out of it. And I was watching a video a couple of weeks ago where a guy said professional traders, the difference between professional traders and retail traders is like, it's like a poker game, you know. When professionals play poker, they don't play their whole hand like in the first round, you know. They wait for the perfect moment, and then they put all of the risk in so they get something out of it. And that's one thing that I would actually change, kind of the biggest thing, because I really still do that mistake sometimes where I put a lot of trades in a week, and that's something that really messes you over.
Yeah, I think it's all about having a plan. So for me, I'll aim for 1 to 3 winning trades a week, and it'll be either 1 to 3 risk to reward or 1 to 5 risk to reward. That's it. 2 to 3 winning trades a week. That's all you need. You don't need to be trading every day. But that's where I learned. That's where I got consistency with through IM.
I definitely agree. I kind of aim for the same boat, right? And I also do that. I think you mentioned this at one point, Connor. Not here, but in your group. That when you lose twice, like if you start out on a Monday or a Tuesday and you're trading and you have 2 losses, you kind of just cut it off for the week. Is that true, right?
Yeah. So if I have 2 losses in a row at the start of the week, I'll just take the week off. You know, and it takes a lot of discipline to do that because you do want to trade, but again, you just need to treat it like a business.
Right, exactly. All right, so can you guys see can they see my screen, right? It should be shared. So we're going to look at the Canadian dollar and what actually happened on the 8th of November and the trade that I took. Okay, so this is typically where this was the only setup I saw. But if you kind of scroll out on the higher time frame, right, we're on the 5-minute here. You can see that there's no real direction in terms of the 5-minute. We're kind of in a consolidation. If we go on the higher time frame, you'll see that I think we were actually going. I think we were bearish on this pair to begin with. Yeah. Okay. Okay. So now we were. Okay, we were bullish. Anyway, that doesn't really matter right now. Typically, I will look for a daily POI. Okay, so typically I'm going to look for some imbalance that needs to be filled on the daily. For just example purposes, something like this, right? You can see that we're at this this point of interest here. Okay, so this is kind of how you get your higher time frame bias, right? I'm not selling until I reach this point. Why? Because there's money up here. Okay, orders are lost with the sharp move down from the algo, and the rule is that all the money needs to be tapped into. Okay, whether it's buy side liquidity up here or sell side liquidity down here. Okay, I'm going to walk you through this. Typically, I like to see a daily or an H4 POI where I can zoom in and look for my setup. But for this trade, I was actually surfing the 1 minute and the 5-minute time frame. Okay, I was just kind of waiting for a setup since we were consolidating for quite a few days, and we weren't really at a daily POI, which I like to see. This was a lower probability setup that actually worked out. Okay, so let me go back to the 5-minute here. And let's go to the 8th of November. Okay, so looking at this, I'm always marking out the time, right? My trading window is from 8 to 11 in the morning. Okay, and New York Hill Zone is taught to be 8:30 to 11 in the morning. Like I said, I'm in the US. I can't be waking up at 3:30 and 4 a.m. anymore like I used to. I actually can't believe I used to do that with other work on top of it. I'm starting to go crazy a little bit. It'll really take a toll on your mental health. Another thing to note, that when you're not in the right state of mind, just don't trade. If you have something going on that you're struggling with during your life and in this period of time, this week, that's been on your mind, don't trade, okay? Because you need to be locked in. You need to be in the right state of mind. We always say about psychology, okay? Just whenever, just for example, if a family member is passing away, or if someone close to me, unfortunately, has passed away in the past, just speaking, I won't trade. Okay, I'm not going to be trading when all that is going on in my life. Okay, just something to note. Okay, so you can see that we're in the New York Hill Zone here, and we're on the 5-minute chart for USD CAD, and this will come into play in a little bit. This is the 1 minute. I just wanted to put them side by side for comparison. Okay, and here's my POI, higher time frame POI. Right, we're talking about 5 minute and 1 minute, and I wasn't expecting a lot out of this trade because we were consolidating. Okay, so I did see this POI over here. Not a very good one, to be completely honest with you. It's kind of withheld a little bit, but not really. It more or less tapped in the 1 minute POI up here. So you can refine this, but we're speaking in hindsight, right? So typically I would go down to 1 minute and refine it. But I want to be honest with you and walk you through what I was doing and how I did it. Okay. Again, I'm only trading at this window. Okay. From 8 to 11. I'm only looking for my setup here. And you do need something on the left side of the chart to confirm, to have a higher time frame confirmation, right? Something in the past. You can't just be trading setups, whatever they are, your schematics, your Wyckoff schematics. You can't just be trading those up and down. It doesn't work. Okay, you need a higher time frame bias, or you need something on the left side of the chart where there's an imbalance and there's money sitting. Okay, why? Because liquidity is the only thing that ever really matters in the market when it comes to smart money. If you're trading smart money, it's just the money. Okay, when you can pinpoint where the money is, game over. Okay, look for the liquidity. Start to think on the other side of the screen. Where would you go if you needed to take the money of a retail trader? Okay, you need to start thinking like that on the other side of the screen. Anyway, I saw that we ran stops here on the 5 minute, exactly on 9 o'clock at 9 o'clock a.m. Eastern Standard Time. That high was made and it was ran. Okay, this was ran New York Open. And then I saw this minor break of structure. And I want to point out that this internal break of structure is enough. Okay, this is confirmed BMS. You can call whatever you want to call this. I'm on a new computer, so I don't really have anything. You can call it raid, purge, run on liquidity, whatever, run on stops, whatever you want to call it. It all means the same thing. Okay, and then what I'm looking for is for price to tap in at the extreme. Okay, again, why at the extreme? Because that's the highest probability. If you're looking at the setup, that's where the highest probability is. Okay, price could come up here, come down here, break market structure, turn back around, maybe fill an imbalance or an order block. If there was an order block sitting here, or an area of an imbalance, this would have been a lower probability trade. When price trades back to the extreme high, okay, up here, that is when your entry comes into play. My entry comes into play, okay, at least for me. And you can see that we tapped in, it came off of it just like that. And I want you to notice on the left side of the screen how price is fractal, with time especially, okay? Up here is your POI, right? This is all manipulation, breaking market structure, and then a return to the extreme POI on the 5 minute time frame. Okay, this is the 5 minute, and we're working over here on the 1 minute. Okay, I know Connor likes to look for breaking structures on the 15 minute time frame. Okay, whatever, 15 minute time frame, whatever you're using, 5 minute, 1 minute, 15 minute, 1 hour, or 15 minute, 4 hour, 4 hour, and daily. You're gonna find this everywhere. You're gonna find exactly this and exactly this on the daily time frame, on the weekly time frame, on the H4 time frame, because price is fractal with time. Okay, and I know you hear that a lot. You probably hear me say it, or Connor and Firas say it a lot. But drill it into your head. Really understand that this occurs everywhere, from the 30-second to the 1 minute to the monthly time frame. Okay, because all that matters is the money. Okay, the algorithm, and yes, this is an algorithm, to take money stays the same. Okay, might you have to change and adapt when you have season changeovers or quarter changeovers, and yes, that is a thing. You might need to change some things and adapt, but nonetheless, this is going to stay the same. Okay, so I'm always targeting the extreme here. Okay, this order block on my higher time frame. After I get my break in market structure, my limit is set. Okay, and I went short. My limit was set for spread purposes. It was 24572, I think. My stop went above the extreme. Okay, and what am I targeting? I'm targeting here first, Okay, I'm targeting this low. Why am I targeting this low? Because there's money sitting here. Okay, this is liquidity. This is also liquidity. Okay, now this might have not been the biggest moving trade, but it was a profitable one. And like I said, I want to keep this transparent. And I want to keep this an honest session, right? I want to keep this honest. I'm not going to come in here and tell you that I took a 1 to 16 risk to reward trade this week in hindsight and explain it. I'll save that for YouTube and I'll save that for my premium group. Okay, but this is honesty. This is transparency. You don't need the biggest moves. Okay, you need, if anything, the little ones. Why? Because the little ones start to add up. When you start to think in terms of RR, like I said, and you don't think in terms of pips and in terms of money, things are going to start to pile on. Your R is going to start to pile on. Because why? You're going to see +4, -1, -1, +3, -1, +6, -1, +2, -1, -1, -1, -1, and you're still profitable. Okay. So I'm taking partials here at this low. And I'm also going to look to take partials here at this low. Okay, and then I actually left one runner on, which eventually came back and hit my stop. A little secret gem for you. Well, you might say, well, where does your stop go to break even? If I don't have an external break in market structure, okay, for example, this low made this high, which made this low, which made this high. This is the internal structure, and this is my external structure. Okay, if I don't have a break of the external structure, and we didn't, this would have been where my stops went to break even. So my rule is, if we don't break external market structure, after 10 pips, I'm going to break even, okay? Or 1R, for those of you who don't understand what R is, risk to reward. And I know a lot of you probably still think in terms of pips. So after 10 pips, which is 1R for me, typically, I like to sit around 7 to 10 pip stop loss, which is 1R. Okay, so partials are taken here, partials are taken again here. And then I have one runner, which eventually comes back and tags me out. Nonetheless, this is still a trade that I took and that I was profitable with, right? And you have a nice almost 1 to 2.5. I think my stop might have been a little bit tighter here, but not the best trade, but it was one that worked out. I don't want to take up everyone's time. Connor, are you able to show a trade, or are you still on your phone? Firas?
Yeah, what's up?
Did you want to show an example so we can see how you approach?
Yeah, definitely.
Awesome.
Because I know people want to see the technical more than they want to hear the psychological.
Right.
And that's so understandable, because like it was always like that for me too. When someone was just speaking about like psychology and stuff, I was like, yeah, bro, just show me the charts, you know?
Yep.
But the thing is, if I just share my screen, you can see the screen now, right?
You're good.
Yeah. So the thing is, guys, I told Connor and Samson that I didn't want this call to be too technical, but of course we need to have a little bit, because I know that's what you guys came for in the end. But I really want you to understand that it doesn't matter what we're showing you right now if you don't have the psychology for it. And that was always the case for me. Whatever like I learned about order blocks and fair value gaps and stuff, it doesn't matter if you know those things. If you don't know how to put them together in confluence, and also using the right psychology and the right trading plan, it's not going to make anything for you, right? You might just see that what you're seeing is actually playing out in some way, but what you see is actually playing out in some way, but you can't act upon that idea in the right way, you know? So I just want to show you guys, before I get into an example of a trade, I want to show you what actually, let me just change the screen. What you should actually be studying if you're looking to be profitable, and if you're looking to to find the right system for you, or like find those precision entries as we all want to, you need to study these fractals. Okay, and I've sent this in my private free group. So you need to study these fractals, because what you're actually looking for is the sniper entries, right? And if you look at all of these fractals, that's where these sniper entries occur. So the thing that makes most sense is that you study those fractals and understand what happens in like when the reversal actually occurs. Because the same thing as Samson just showed, it's the same thing that's happening over and over and over again. So if you just can understand that and get better at it and use it in the right way with the right psychology, that's a system for you to use, you know. And this is the way that I trade. I'm not telling you to trade this way. You have your own strategy, you have your own plan, follow that. But this is for you, that like for you people that are lost and don't know what to actually do, because I know that was the case for me. At some point in time, I didn't know what to do, I didn't know what to look for. I was just learning about order blocks and gaps, and I didn't know when to use them. You know, I was just looking at every gap and every order block and trying to put a trade there, and that never worked out. Maybe one out of five times, you know. So I sent this in my group, and I want to show you what actually happens before getting into a trade I took last week. So I pointed out that we're studying this fractal right here before this big move up, and I'm studying this on the 1 minute time frame. I trade mostly on the 1 minute time frame and the 5 minute time frame. That's where I take my entries, because I like to have a very small stop loss, and I usually go for smaller targets, you know, 10 to 30 pips. That's all you need, because it's not about the pips, as Justin just said, it's about the risk to reward. So if you have the risk to reward, you don't need anything more. You can catch 10. I can make as much money as if Samson uses 1 to 3 risk to reward and his target is 100 pips. I can make the same amount of money with 10 pips. So that's not the case. It's just about learning the risk to reward and using it in the right way. So I told everyone to study this before sending out my markups, but I just want to show you guys to make you understand a little bit about how I trade. So the same way as Justin was saying, he looks for his point of interest on the higher time frame, right? And that point of interest is something that we call a PD array. And that PD array is another word for like order blocks, breaker blocks, gaps, or whatever, you know? So when the market is moving in a bearish direction or on a higher time frame bullish direction, but you have a bearish correction, you're looking to enter like on discounted prices, right? And this on the discounted prices, you need to find somewhere where you would expect price to start reversing. And in this case, we're using a PD array, and I was using, I think it was a previous low that market took out right here. And this is the area that I marked up. And I show you guys that because a lot of people say that 1 minute is too much noise and I can't understand anything, this is simply how it would look on the higher time frames. If you look on the 50-minute time frame or 1 hour, this is how this fractal would look, right? And the candle that I usually want to be trading is either this or most often this, because this is where you've gotten all of your confirmations. And if we go to the next picture, you can see that I've shown you that these lines represent how it would look on the 1 minute, for example, and these candles may be the 15-minute time frame. And what I look for when we actually reach a PD array, when we are in a higher time frame bullish market, I look for 3 types of signatures, if we call it that. Okay, so basically what has happened right here is price has been engineered to a specific level where smart money, the market makers, are shorting, right? They have shorting positions there to take the market down. And price after that is going to reach a specific area, right? And we call that a PD array. It's going to be an order block, mitigation block, or whatever, okay? And in this area, you want to look for 3 signatures, or at least what I look for. I look for a stop hunt, right? That's my first signature, because one thing that I've learned that has taken my trading to a whole nother level is you want to always be buying below old lows and you want to be selling above old highs. And if you try that out sometime, I tell you, it would make a whole lot a whole lot of more difference if you, of course, use it in the right time and in the right way. But basically, when we get a stop hunt, that means that the sell side liquidity in this case, so all of this, the buyer stop loss and also the sell stops that placed above this low are now purged, right? So these traders are out of the market. And whenever that happens, I want to see price show me a signature of it wanting to go higher. And what is that signature going to be? Is the break in market structure. And this is something that we all have learned. Like, it was pretty much the first thing we all learned: higher highs and higher lows. And it's so simple, but it's also can be so effective and so useful, because price is actually showing you what it wants to do. And whenever we get that break in market structure, we want to return back to that origin, right? That extreme point that Justin was talking about. And that's where we want to act upon our idea to go long. Okay, so if I'm showing you this example now, I want to show you a trade that I took last week, just to show you more kind of a recent event that happened. And this is going to be the other side of it. So this is a market maker sell model. What I just showed you on Telegram is a market maker buy model, right? So basically what I use when I trade is simply higher timeframes to understand and to get a picture of where price wants to move. And I do that by framing price into something that is called interbank dealing range, right? An interbank dealing range. If you don't know what that is, I'm not going to explain it, because the best guy out there to explain it for you is Inner Circle Traders. So just search it up on YouTube and you will find a lot of examples on his channel. So basically what I was looking at during last week was this range right here. This is the interbank dealing range. And why is that? It's because this price point right here, this leg up, ran liquidity on the buy side, okay? We ran liquidity on the buy side, so it's purged right here. The buy side liquidity is purged. And after that move, this price leg down purged the sell side. So we have cleared both sides of the market. And whenever that happens, you have your range, your interbank dealing range. And it's going to be the high that actually purged the buy side and the low that purged the sell side. Okay, and why am I not using this low? It's because after this low, we didn't make any kind of high. We just went lower. And after this low, that's where we started to make this correction. So this is the low that you want to be using, right? And whenever you have your interbank dealing range high and low, I can just write it out for you. Interbank dealing range high, and you have your interbank low, right? You have your high and your low. And what other information do you have? You have an information of price actually being bearish on the higher time frames. And in this range, what you want to use is your Fibonacci to gauge where the equilibrium is. And if you don't know what that is, that's basically the 50% of this range. And why the 50%? Also, if you want to learn about that, go into ICT. He explains it the best way. But basically, 50% shows us where the fair value is, right? It shows us where we have our premium prices, which is right here, premium prices, and we have our discounted prices below the 50%, right? So in other words, I would not be looking to sell short on Euro USD if we are still below the 50%, because market makers are not going to make any kind of big move if it's not a fair value for them, right? They're always going to move the market in their favor. Not always going to move it in their favor. Of course, like they have manipulation moves against their favor, so they could then go with their favor. But what I'm actually trying to tell you is this big move is not going to happen below the 50%. Okay, so above the 50%, what I would actually look for is my points of interest, and that would be a PD array. And in this case, it's a bearish PD array. So what we had is on the 4 hour, we had a order block right there. order block. And some guys ask me, do I use the wicks or do I use the bodies? Depends on which time frames. When I have a higher time frame order block and it's in this kind of shape where it's not really, it doesn't have a lot of body, I use the wick most of the times. And when I've established this order block on the 4-hour, I go into lower time frames to actually refine that area. So we can see that we have also a fair value gap on the 1-hour time frame, right? So I will not be interested in actually trading Euro USD until we reach a certain point of interest. And from that point of interest, I want to look for the same signature that I just showed you, right? The signature that I just showed you on the Telegram, I look for the exact same thing, but this time it's a bearish signature, right? The first signature, as I said, is the stop hunt. We have a stop hunt, and after the stop hunt, we get a break in market structure. Now, the break in market structure did not happen there. It happened after this move downwards. Okay. And whenever we get this move downwards, we have our break in market structure. Let me just type that out for you as well. Let's make this red and let's make this blue. So the red is the equilibrium and the blue is the PD array. And in this case, the PD array that I look for whenever we break the market structure is usually a breaker block, right? And in this case, this is the breaker block on the 1-hour. So right now I have refined the price and my points of interest so deep that I can now go into the lower timeframes and look for entries with the highest risk to reward. Do you follow me? If you follow me, please type something in the chat. Type a number 1. And if you have any questions, just say them. We're gonna do a Q&A at the end, so don't worry about that. Okay, great. Most of you are following. So right now I'm on the 50-minute time frame. That's usually not where I trade. Let's go on the 5-minute. 5-minute and 1 minute are where I trade. You just got a sneak peek there, but that's fine. Okay, so after I've established my 1-hour point of interest, I usually can remove that because I know what I'm looking for in this structure. So I sent 2 trades out to my private group last week. I think this was on Wednesday when we had the news dropping at 2:30 CET. But basically I sent the first trade out was during London session. So we had the London kill zone at 9:30 to 12, right? This was the London kill zone. And the first trade I sent out was above this high right here. I sent a sell limit on this breaker. My stop loss was just above that high. And my first target was hit. 123.7. And unfortunately, this trade got stopped out, as you guys can see, to the pip, literally to the pip. My stop loss was at 1582, and I've sent this in the group as well, in my free Telegram group. And you can see the high of this candle is 15,822. So 2 pip hits above the stop loss, and it actually made equal highs. So I wasn't expecting that, you know. So after taking this loss, I closed the charts and I actually waited for New York session for the news to come out. And we have the news at 2:30 to 5 p.m. That's the New York kill zone. Okay, so what happened after this move? We broke structure again. So whenever we break the structure, like even though my stop loss get hit, I know that my bias was right and my trade idea was right, you know? It's just that misplacement of stop loss, or that just price actually went to this high instead of rejecting from this area that I was looking for. But after this, I was looking for the exact same setup, okay? And I did not put any trades until the news came out. And I told my group, do not trade. I'm going to wait for the news to drop and we can act upon that idea afterwards. okay? And basically, price dropped on the news candle, it dropped all the way down to here, okay? I had an alert just above here. It did not hit the alert and it just dropped down below. So after this drop, I was like looking at this candle. I was like, this has to come back and take out the early sellers from the market. And I actually have, let me just show you the final analysis in my Discord. I sent this, yeah, this was it. So I want to show you guys this because I've already marked this up. Let me just read it out for you. When we have news release, we expect manipulation moves to happen. That is why we wait for the release of the news and act upon our idea after, so we understand where the manipulation is happening. And you guys need to understand that whenever there's news, there are always going to be some manipulation. And usually when you have big news, right, there's going to be 3 movements in that manipulation, okay? And in this case, we see that this candle at 2:30 dropped below this low. And what is actually happening? Early sellers are in profit. So the sellers from here are in profit, and below this low, the sell stops are getting activated. So all the people that are willing to sell below this low are now in their trades. And when that happens, our focus is on that high of the candle, because this high holds the buy side liquidity. This is where all the early sellers are, and they have their stop loss just above this area. And in this case, when looking for shorting opportunities, we want to be shorting above the initial high where everyone is selling, as I just said. So I put an entry at, let's go back to this. I can actually show you guys my group. I've removed it now from Telegram. We've moved on, but I can show you the limit that I sent, just so you know that this is not just hindsight. Sell limit on Euro USD 1.15640, stop loss is at 1.15790. So that would be 15,640. 790 was up here. So it was a pretty high stop loss, but I wanted to get in early because I've already lost that trade. So I got in early and I halved my risk, right? So I only went in with 0.5 on a 20,000 account, which is like, this was around 0.5, not even 0.5% risk. It was 0.3 or something like that. So 0.3, I had my take profit at 15,100, which is just below the interbank dealing range low that we just marked up. And there is 2 types of entries that you can actually go in from here. There's 2 techniques, right? The first technique is using your POI. For example, this breaker right here, the beautiful breaker that we saw. Too many blue lines right now. There we go. This beautiful breaker, you could actually use that as your entry, high probability entry, or you can use another technique, which I also like to use, is wait for the same exact pattern you saw right here. You see this pattern? Break in market structure, return to a POI, and then we sell off. The same thing happens, but on the 1 minute time frame right here. And let's get into that, because that's where I usually take my trades. And this is the reason why, because I can see where the early moves are going to happen. And this is, I would say this is the safest way to trade whenever you're looking for some kind of trades in this way. This is the safest way to trade because price is telling you that your bias is right, you know, and it's doing that by showing you that price is breaking market structure and it's coming back to the breaker right here. The same exact setup, but now on the 1 minute. And instead of having a 15 pip stop loss, now you could have a 10 pip stop loss, for example. And you can target the same exact area. Where would I take my first partial? First partial would be always, in most cases, I take my first partials at the nearest low, okay? And then the next partials would be at the external liquidity, which is right here. And the third target would be the higher time frame target, okay? I know I took a lot of time there. I'm going to give it up to Justin, but I hope you guys understand that, like, is this the same pattern happening over and over again? It's just how you understand it, right?
That was great. Firas is giving all the sauce out,
Yeah, I think I went too deep, huh?
huh? That was really good. No, so you, like I said, guys, the moral of the story is that in terms of the technical side of things, there's always going to be a higher time frame. It's always going to be something on the left. There's always going to be an imbalance, a fair value gap, a breaker, an order block that's significant, and that is an imbalance, that gives us confidence to take our trades, right? That gives us a higher time frame bias, right? Or not even a bias. You don't even really need a bias with everything. Okay, you can be a buyer and a seller in the same day. I can buy one day, Firas can see a sell setup the next day. But the bottom line is there's two ways that you can go. There's two ways where the money moves, okay, or the where price moves. It's to liquidity or to an imbalance. Okay, there's the only two things that you can determine off of where price might be heading. Okay, it's liquidity or an imbalance. And once you can spot these things out, and once you come up with a system, you're golden. So I'm going to open it up to everyone now to ask in the chat questions at Firas, at Connor, at me. I know Connor didn't really get to show much today because he's having technical issues, but that's all right. I hope you guys found value in this. Like I said, it's just, I really wanted you to take advantage of it because it is for free. And you're getting 3 different perspectives from smart money traders. So for Firas, for me, for Connor, if there's any questions, you feel free to ask them in the chat. Firas, when there's fair value gap and order block up there, why do you choose to enter off of the breaker?
You mean, wait, who was it?
Timothy
Yeah,
Moore.
Timothy, do you mean the 1 minute, the last example that I showed you? Yeah, the recent 1 minute chart. The thing is, there's not really an answer for that. It's just about how you are comfortable in your trading and how, like, what your system is and what you're used to using. On the 1 minute time frame, I find that the breaker blocks are the most effective for my trading style. And also not just that, if you see, yeah, preference. And also if I just show you here again quickly, that breaker right there is also the open or the low of this order block, right? On the 50-minute time frame, sorry, the 5-minute time frame, and also it dips into the 5-minute fair value gap right there. So it's a breaker block plus a order block plus a fair value gap. And I'd rather look at the order block on the 5-minute than on the 1 minute, right? Because there's a higher probability of price turning back and going short from here than all the way above here. Because usually when this reversal happens, price will not come back to this area. Okay, so it's just about confluence really, and actually understanding where the 1 minute breaker is in confluence to the 5-minute and 15-minute.
What's the difference between IPA and OB? Who are you asking, Rex? Of course, can we use price swings to determine directional buys? You can for the highs and lows, and like Firas said, the inner circle trader talks about that a lot. If you look up, there's videos on literally just short-term price swings and how important they are. I would advise you to go there so we don't have to obviously go into a whole explanation. But typically where price swings are taken, it's the same thing. So me and Firas, we say different words, but we mean the same thing. Like when you can see he's charting out, a lot of the things are similar in terms of his signature and in terms of his system. Now that trade that he took was really in depth, right? Like I said, from top down, he's a beast, and he knows. He really dives into price from whatever it is all the way down to the 1 minute, and he can get super technical and really kill the market. But swing lows, when a swing low is taken or swing high is taken, that's liquidity, right? Would you recommend 2 entry attempts at breaker and possible fair value gap order block up there? I think so. I think like you just said, the breaker was included, like the breaker covered the bottom of the order block, or what was it for us? The bottom of the order block and
Yeah, the bottom of the order block and the fair value gap. And I would say personally, like taking multiple entries on a trade, I do it sometimes, but I would mostly stay away from it. And I'm not going to go in detail to why, but basically it messes up with your ROI, you know, because your first entry can be a 1 to 4 trade, but your second entry maybe is a 1 to 3 or 1 to 2. And if you lose both of these entries, that's going to mess with your risk mathematically. And that's why usually I do take multiple entries a lot of times because I'm scalping, but I don't recommend it.
okay, so I want to just add on that. When he's saying he's taking multiple entries, yeah, that doesn't mean that he's taking necessarily, technically it doesn't mean that he's taking 20, 30 trades a week. Okay. When I use multiple entries, I'm doing that because I actually can't, I would rather break up in terms of lot size. So if I'm trading, just for example, a 5.0 lot, I'd break it up into 4 pieces and have a separate target for each one, so that I can kind of, manage it without really managing it as much. And that just works for me. If I'm busy and whatnot, and obviously you could see Firas lives in a perfect place where he can trade New York and London. Okay. Yeah. So yeah, smart.
Wait, I want to correct you there. Guys, I actually work a 9 to 5 and I'm still
Yeah.
trading. I'm trying to
Wow.
trade London and New York, and it sometimes can be pretty stressful. And the thing is, you guys, like that's the thing. If you're trading full time, because I got a job like 3 months ago, and before that, I've been trading full time for 1.5 years. And the thing is, when you're trading full time, it's very hard to not overtrade. Okay, it's very
Right.
hard to not go into the market every single day and try to look for money, because that if that's your only source of money, trust me, it's very, very high probability that it goes the wrong way. So I recommend you don't have to get a 9 to 5. That's not what I'm saying, but do something else. Do something like more than your trading, because trading is only something that would it's something that's going to complement all the other aspect of your life.
I agree totally. I wanted, that brought me to a point where I wanted to say about the whole lot size. So in terms of risk, and right, in terms of it being a numbers game, because that's really all trading is. It is a numbers game, right? I said none of this stuff actually matters. None of the smart money stuff really matters. You can break and retest. You can trade at retail. You can be profitable with retail as long as you're playing the numbers right. And by saying that, I mean that as long as you're risking properly, and you hear it all the time, and I heard it all the time, and I'm like, why do I keep hearing this? Whatever. Yeah, I'll risk, properly, whatever. No, like make yourself a sheet. I use Airtable. I know Firas uses Excel. Excel is probably better. I just prefer Airtable, and really record everything, and you're going to see how the tables turn. Like I said, in saying all this, your lot size is flexible, right? So Firas said that he lost the trade, and then he, whatever was under 1%, and it was a 1 to 4, and then he took another trade in New York, and it was maybe a 0.3% of his account. Okay, you can be flexible with your lot size. Like he said, what was that example, Firas, you gave, where someone can make 100 something, and you can trade.
You can, if Justin takes a trade with 1 to 3 risk reward with 100 pips target, and I have a 1 to 3 risk reward with a 10 pips target, we can make the same amount of money with, like I can make the same amount of money as him with only 10 pips.
Exactly. Yeah, because of the lot. Time.
What would you recommend someone who is profitable to become more profitable? Exactly what Justin said. You need to journal exactly your trades. Guys, I want to show you, I made this journal yesterday, and I've also sent it out in my free group. Just a quick, this right here. Okay. In this, now you can take this and make this whatever you want, but date, pair, lot size, buy side, this is like something that you need to have, risk. But this is very important. You're feeling towards the trade and also the chart image, because you're feeling towards the trade. Like when you write these things down and you've written down like a whole month or 3 months of trading, you can go back and actually look at, okay, I lost this trade. What, like, you look at your losses and see the pattern in your losses. Why are you losing those trades? And you can refine that all the time. And something that I really admire is the saying is, you can't master trading. You can't become a master in trading, because trading is basically fighting against yourself every single day. And knowing yourself and trying to improve yourself is, I would say, one of the hardest things. So it's just about refining so like small elements here and there, and that would actually make you more profitable. Firas, you're not recommending full-time, even if a person is sticking to your working model. What do you mean, bro? I'm not
So
recommending
So
full-time
he's
trading.
saying, why can't I trade full time if, basically, why can't I trade full time if I can be profitable? Because when you start, like he said, when you start to do that, you really, that's in a whole nother level of discipline. You need something else to keep you busy until you can get that, and that comes with years of experience.
Yeah, bro, and don't take it like in the wrong way. You can trade full time, bro. Like this,
Right.
it's not saying don't, but the thing is, if you have, like, for example, a 10K funded account and you're trading full time, you're not, like, your percentage is not going to, like, if you can live off $500 a month, that's fine for you. But most of us can't, you know. If you're looking to make 3K a month with a 10K account, that's a very like that's very pushing it to the extreme. So if you have a 100K account and you're funded and you can manage to make 1 to 3K every single month, go ahead and do that. But after doing that, you need to start investing in other things and doing other things, like running a business or doing something else. I'm not saying don't trade full time only, but don't only trade. You know, do something else that is making you money and getting you more income. I would like to ask, is it a good thing to use 0.01 when my win rate is 40% to 55%? I don't know, well, that question doesn't really make sense,
It
but
depends on your account size.
yeah, like it depends. I don't really understand the question so much, but if your win rate is 40% to 55% is definitely like, that's very, very good. I would say 60%, 70%, that's the top level, you know, and you can be profitable. Like my account right now, I have a 20K account. I can show you guys my stats if you want to, but my 20K account, I have around 40% to 45% win rate, and I'm up 4 or 5% on the account in 1 week. So you don't need to have a high win rate. If your risk rewards are high, I don't see why you shouldn't up your lot size. For both of you, what's the first thing, number one thing for you, confirmation wise, basically? I wouldn't say like I wouldn't say there's only one thing. It has to be a confirmation or a confluence of multiple things.
I want to show something real quick. So like off of that question, exactly what he just said, there's not one thing, right? There's multiple confirmations. It's the system, it's the rule-based signature that is the confirmation with something over here on the left side of the chart. Like he said, his PD array or my POI, whatever you want to call it, the imbalance. The confirmation is the system, is the rule-based system. Okay, it's my rule-based system, right? And it's Firas's rule-based system. So you get the stop hunt, right? The break in market structure. And depending on what happens here, it could be any kind of Wyckoff schematic for me. I really like to trade back to the extreme here. Okay. And this is dependent on what's on the higher time frame or what's over here and how significant is it. And I'm also looking at, like Firas said, has what's been taken, the buy side or the sell side. Okay. If buy side liquidity has already been taken up here, and there's sell side liquidity down here that's purged. Okay, now my eyes are in. Okay, your eyes should be in, and you should only be focused on something once the money is taken. The purge on liquidity needs to happen first, and then my eyes are caught, is what I'm trying to explain to you. Okay, so if buy side liquidity is taken here, okay, and then work their way down to take sell side liquidity, and then this is where that the inner dealing, whatever, the bank range that Firas uses, okay, with the premium and discount prices, and that can be found on any time frame again. But the bottom line is buy side liquidity taken, sell side liquidity taken. Okay, your eyes should be on.
Yeah, I would say, yeah, definitely. And if we have to say one, I would say the stop hunt. I need to see a stop hunt before acting upon any idea.
Right.
Either one of you, if there's a breaker block created in price, but price doesn't trade back to it during that session, is it still good to use going forward? Now, this is a question that like it's very vague, and like we need to have, or I would say I need to have like a specific example on a price chart where that happens to actually explain it to you. If you have a 100K account, would you recommend getting a funded 100K account and investing in other things, or just keep the 100K account? Do you mean that if you have a 100K account that you have funded, like not from a prop firm? What are your recommendations to fixing trading psychology? I think that's also a very vague question, because it's very different for a lot of people. You know, all other people, all different people have different minds, you know, and we are all unique in our way. And that's why we all trade in different ways. That's why I can see something on the chart that that Justin maybe doesn't see, because he sees the market in one way and I see it in another way, even though we trade the same concepts. And that's actually the beauty of trading. But tips from myself, what I do to actually improve my psychology is, number one, journal your trades so you understand what trades you've taken, and also can look back at how you were feeling during those moments. And the second thing is to actually, something that Justin said, is having a clear mind when you're going to the chart. If you have so much stuff happening around you in your life, it's going to be hard for you to focus on your trading. And the last thing that I would say that I do personally sometimes is meditation. Meditating before actually going into the chart, so I can clear my mind from all other stuff.
Those are very good points.
Richard said, yeah, 100K account. Bro, for myself, whenever I found out about prop firms, I don't ever want to put my own money in a trading account, because the thing is, why would I put 100K in an account and have the risk of losing 100K of my money when I can buy a 100K account for $500, for example? And whenever you have a 100K funded account and you are making money from it, bro, use that money to do something else. Do not spend that money. Use the money to invest in, like, I'm not giving you investment advice, but start your own business or do something else that's going to make you have different sources of income, because that's something that's going to make your trading a whole lot better, because you're not going to be so focused on trading every single day. Do you have recommendation except FTMO, or is that the one? I personally have not traded any funded prop firms except for my Forex funds, and they have been very good. So I can't really compare other prop firms. Mentorship group, or do you want to say something about the questions, Justin?
No. I was just I'm in the same boat as you.
Okay, great. Mentorship group, how to join, Black Friday discount. I don't know. Do you want to? We can just give you you can join our free Telegram groups for now, and you have a whole lot more information there. I can drop my Twitter and stuff for you guys also. Well, I forgot my Twitter.
If any of you need to contact me, it's just Samson 4X, the number 4 on Telegram. That's how you can get to me.
Question.
And just reach out with any questions as well. We're here to answer everything, especially, and I just want to thank you all for taking the time to join, and really focusing, but don't take our word for it. As Michael Joe Huddleston always says, go look back and see all this stuff for yourself. But I would advise you to please stay updated with the group, with our groups on Telegram, because you're going to see everything that we just spoke about come into play every single week, and every single time we put something out. We're not speaking, we're not teaching things that we don't use. Okay, this is, like I said, this is completely 100% honest and transparent, and we practice what we preach.
Definitely.
Is the program the same in Asian, London, and New York sessions? Yes. That's why you see in Asian, it's the accumulation and distribution, accumulation, manipulation, distribution. Typically, London will be, or right out of Asia will be manipulation, but moves do come in London, obviously. I can't speak on that much because I don't actually trade it, which also limits my trading. But you deal with what you deal with what you can do.
Mm-hmm.
Awesome.
So
Okay.
I don't see any more questions. Any more questions, guys? Does the strategy also apply to industry? Yes, definitely. I would say, like, I don't know if you guys know this. There's a guy called Stock God on Twitter and Instagram, and he's a great example. I don't know if you've heard his podcast on Spotify, but I think he's great, and I think he trades Nasdaq, and he also has gotten into stocks trading right now. Or I think it's stocks or something like that. And he's trading the exact same concepts. And the thing is, what I've understood and what I've learned from different people is the markets are like programmed to do the exact same thing. They move in the exact same thing, and they have been moving in the exact same way since long time ago. His name is SG. Stock God, something like that. Yeah, so that's pretty much it, right? We've been here for almost 1.5 hours. I know some of you guys have stuff, but if you have any more questions, you can hit us up on Instagram or Twitter or whatever. You can join our private groups or free groups, sorry, on Telegram. And yeah.
Yeah, I want to say one last thanks to everyone for coming out. We appreciate it. I hope you find value in this, like I said, and really, don't take it for granted. Go and watch this recording back if you need to, and go look in the charts yourself. Don't bend yourself over backwards staring at the charts. Okay, but the thing is, you should be back testing, and you should be trading in quote unquote hindsight more than your live trading. So if you're sitting down and trading live for more than, I would say, over 2.5 hours, or in his case, it would be 4 or 5 hours, right? Because you trade both sessions. For me, it's 2.5 hours. Then you need to stop that. Okay. So again, I'm going to wrap this up. Thanks, Firas, for all the information. Thanks, Connor, for coming out again. Unfortunately, we couldn't get Connor to show his trading, but hopefully you guys can see enough of that in his group. So we'll see you guys all in the future. And thanks so much. Maybe we'll do this again at some point. But good luck and good trading.
Peace out.
Thank you.